UOB, UBS and Citi are among 9 financial institutions that have been slapped with $27.45 million in penalties over Singapore's largest money laundering case in 2023. The central bank says these penalties reflect factors like the extent of each firm's exposure and the number of breaches. Let's take a closer look at who's being held accountable. Now, the 9 financial institutions include banks, capital market service providers and a trust company. The highest, Credit Suisse Singapore, at $5.8 million, which includes earlier breaches in a case involving US customers. Followed by UOB, UBS and Citi. UOB's trading arm was also penalised $2.85 million. MES says all 9 failed to act on red flags in documents that should have raised questions on where the money was coming from. In 8 cases, the firm's own systems flagged suspicious transactions, but no one followed up. 5 of these institutions also misrated the money laundering risks for their clients. 9 individuals were also penalised. 4 were from venture capital firm Blue Ocean Invest, who have been banned from carrying out any MES-regulated activity or take up roles as partners or managers in a financial institution. 2 from UOB were reprimanded for failing to conduct due diligence or do adequate follow-ups. 3 from Trident Trust Company failed to comply with MES requirements, and another 9 relationship managers and supervisors were also reprimanded privately.
This case demonstrates the importance of financial institutions and their employees' continued vigilance to defend Singapore's financial system against money laundering risks. They should be alert to material red flags when dealing with customers and escalate concerns where warranted so that appropriate and proportionate risk mitigation measures can be taken. MES will work closely with the financial industry to promote more consistent implementation of our anti-money laundering measures.
MES says the penalty marks the end of its enforcement actions against those involved in the $3 billion money laundering case. But that's only for financial institutions. MES may still take action against some individuals after court proceedings or investigations wrap. Nashra Rohim with more.
For the past 2 years, the Monetary Authority of Singapore has found that most financial institutions have controls or policies in place to combat financial crimes. The problem in this case is the implementation. They weren't consistently or adequately implemented. For example, all 9 financial institutions failed to detect or spot discrepancies when it comes to checking customers' wealth and where they come from. These red flags should have highlighted a higher risk of money laundering. To address these shortfalls, banks like UOB say they are stepping up efforts in transaction monitoring. The bank says it has invested in technology and other resources to enhance internal risk management and capabilities, adding that it has also ramped up employee training to ensure high standards of professional conduct. One analyst says that the challenge today isn't just about having the right systems in place, but for players to keep up with new ways of money laundering. And it's non-financial institutions like variable capital companies that have more room to catch up.
I think what has happened over the past few years is that we have seen lots of enforcement action relating to particularly financial institutions, because MES has got an enforcement department set up specifically for money laundering and terrorist financing, and we have seen a lot more enforcement actions in the past. Going forward, I will not be surprised if we see also a levelling up in terms of enforcement cases for these non-financial institutions.
While the 27.45 million Singapore dollars penalty is substantial, it's still not the biggest. That record goes to the 29 million Singapore dollar penalty given to those involved in the 1MDB money laundering scandal.